Good morning. So yes, so the government has actually imposed excise duty on all major steel products. It stood at 0% earlier and now it has been imposed at the rate of 15%. This includes stainless steel as well as pig iron. For iron ore products, it has been increased from 30% to 15%, and for pellets, it has been imposed at the rate of 45%. On the flip side, though, the government has also reduced import duty on some of the key raw materials that are required for manufacturing of steel and other allied products, which includes the likes of coking coal and pet coal. And for stainless steel, nickel is the raw material, and for all of these products, input cost or rather input duty has been reduced. But important to note that the negatives overweigh the positives, and that's the reason why we are seeing that downtick on the stocks. However, it is also important to understand how the whole dynamics plays out. Exporting companies will now not export because domestic realizations will now be higher than export realizations, as a result of which all the mills will now want to sell into domestic market, leading into increased supply, and this will add on to pricing pressures and ultimately impact the profitability of these companies. Also important to note that India contributes around 5% to the global steel seaborne trade, as a result of which global supply might be impacted, and thus perhaps global steel prices could continue to stay at elevated levels. To talk about specific companies that will be impacted as a result of the excise duty that has been imposed, steel companies the likes of Tata Steel, JSW Steel, JSPL, SAIL will be impacted. Iron ore companies the likes of NMDC and GMDC will be impacted, and stainless steel companies the likes of Jindal Stainless Steel and Jindal Stainless Steel Hisar will be the companies that will be impacted. As far as impact on profitability is concerned, analysts say that iron ore prices could come down by as much as 3,000 rupees per ton, steel prices could come down by almost 10,000 rupees per ton, and steel realizations could come down by almost 7,000 rupees per ton, which is net of the benefits, that is the positives as well as the negatives in terms of import and export duty. However, it will also have a positive impact on some other allied sectors which are consuming steel, the likes of automobile sector, which has already been under quite a bit of pressure of late, cement sector, we have construction, engineering, industrial, real estate, infrastructure, and all of these sectors will be positively impacted because of the reduction in import duty that has been imposed for steel inputs. Other than that, we also have a note coming in on steel sector. CLSA has downgraded all steel companies. They have downgraded Tata Steel, JSPL and Jindal Steel. They have downgraded Tata Steel from buy to underperform. They have downgraded JSW Steel from underperform to sell rating, and they have also downgraded JSPL from buy to outperform rating. So the impact, as we can see, all the stocks are down anywhere between 10 to 15% as we speak.
So much for that, Ashesha. That lays the context perfectly for us. Let's introduce our experts for the day. We've got Sharmila Joshi as well as Kunal Bothra joining in. Good morning to the both of you. And I think Sharmila knew that we were going to do this topic because she had her write-up ready for us already. So I'm going to go to you, Sharmila, first. What is this move? Of course, a lot of people have said that's a huge negative, but already you had a few of these steel companies working on very narrow spreads. How does it bode for the sector as a whole? We're talking about this happening at the start of the new financial year. So are you looking at reviewing your expectations for earnings? Have you done that already?
As far as the move is concerned, I mean, maybe I'm sort of being more positive about it than what the stock prices are indicating. But I think net, you may be sort of neutral because, at the end of the day, you have increased the export, the percentage for coal, etc. So your raw material going out is going to be available to you cheaper. Both iron ore, I beg your pardon, coal imports have become cheaper and iron ore export has become more expensive. So both the raw materials which you require are going to become cheaper. And also, I think you're neglecting the fact in this entire equation that China reopen is happening, and that will mean that global markets will stabilize. So I think currently, if the price is around $900 to $1,000 for steel, if this were to say go up and go to that 1,000, 1,100 sort of level, then Indian companies could still export. I think the near-term impact is really because, as I've been hearing a lot of industry voices, that they already have material which is in ships, which is waiting to be exported. So what happens to that? So they do have concerns about that. And I think that will get sorted in the next couple of weeks. So I think that it's a great move, as as you all have been discussing, done largely to rein in inflation. And when you do both, as in you are making exports more expensive, and at the same time you are making import of coal cheaper. Overall, I think that we may not have too much of an impact. If you were to stretch the your time frame, say maybe over the next month to make it like maybe 3 to 6 months, then I think you could probably not be affected as much as you're imagining yourself to be affected today. So I would actually continue to be positive on metals as a space, and that is actually more to do with the fact that we are seeing China reopen, and that I think will mean good things for demand going ahead.
Right. Sharmila, good morning. So which are the stocks that you would rather bet on at this current juncture, looking at the scheme of things? Like you said, that over the next 1 to 2 months, you expect the things to settle down. So which would be the counters would you bet on? Would you bet on any in the metal space as of now, that is?
Well, I do like JS. They have come out and said that they are affected. So I think perhaps allow for that price correction to happen and then sort of look at investing. I think that would be one stock. I think Tata Steel could be another. And I think from the non-steel space, I would continue to like Hindalco.
Kunal, good morning to you, and coming to you on these stocks, the ones that Sharmila has mentioned, as well as if you talk about the broader universe, if you talk about metals, under pressure today, and certainly one can't look at just today in isolation. So if you look at the charts, what are they telling you for these stocks?
See, absolutely. I think, good morning. First of all, we can't look at the metal index just on today's performance and then try and extrapolate. We have to look at the last 3 years of or 2 years of the steep rally these indices have shown, as well as look at the context of the last 1 year of where the metal index is placed up. And we had a very interesting juncture on the metal index as such. So this is the metal index panned over the last 1 year from April May 2021, and you can see that the metal index, after a deep consolidation for the second half of 2021, had a phenomenal rally just about start of 2022. From 4,800 on the metal index, we went up to as much as 6,700. And the last 1 month, particularly from the April highs, the indices have come back again sharply into a correction phase. But the only catch over here is that the metal index has come back towards a 1 year retracement or a 1 year support. Now we are tapping into a very strong support zone for metal index. A level from where we've bounced, we've managed to absorb corrections, and we've managed to absorb a lot of negativity. So before we get into the negative aspect of the news flow, we have to understand that the metal index is actually coming back into tapping some very strong support zones. So rather than looking at this as a point where one can look to go short, I would expect that the metal index takes support over this range of 4,800 to 5,000 levels. We could actually be coming into a good contrarian buy territory for the metal index. So would not be extremely bearish on the index as such. And I believe if the support holds on, we could be looking at more contra buys as well.
Exactly. Sorry, Kunal, I just wanted to then go on to ask you that do you think that this is the right time for investor to look to average metal counters?
So maybe not average exactly, on today's price, maybe over the next 1 week, once the prices stabilize. See, because what happens is once the news flow comes out, the prices adjust to that kind of a news flow. And maybe over the next 1 week is where you see the actual equilibrium coming back into the stock price. So if the news flow is extremely bad for these kind of counters, you see a sharp reaction. And if it continues to remain, persist on the downside, we see an incremental sell-off coming into the stock prices. But if the news flow gets digested, and the market factors in, then we see the stock prices, they stop falling and they get into a sideways range. So we'll have to watch out for the behavior, what plays out in the next 1 week. But I believe that in the next 1 week, they could be at much better price territories where one can look to average.
All right. So thank you, Sharmila, as well as Kunal, for giving your take on metal counter.